For years, preparing annual accounts was a routine compliance exercise for businesses in Kenya. That era is over. A landmark judgment in August 2025 has fundamentally raised the stakes. The Kenya Revenue Authority is now empowered to tax any unexplained deposits in your bank account. KRA is now entitled to presume any unexplained deposit as undeclared income. It is not their job to prove a deposit is income. It is your job to prove with solid evidence that it is not. The tax tribunal made it clear that simple explanations are not enough. The Kirin Pipes case provides a costly lesson. The company could not adequately explain several large deposits. This included a supposed 54 million shilling capital injection and a 31.7 million shilling loan. Because the evidence was deemed insufficient, the tribunal upheld a 21.6 million shilling tax bill. Understanding KRA's process is key to building your defense. First, they acquire your complete bank statements, often without asking you. They sum up every single credit into your accounts. The total is compared against the revenue you declared on your tax returns. The difference is then treated as undeclared income and assessed for tax, penalties, and interest. Not all deposits are created equal. Certain transactions are now considered high risk. The Kirin Pipes case specifically involved failed attempts to explain shareholder capital injections and loans. These transactions are now under a microscope. Customer advance payments and supplier refunds also require a transparent and verifiable evidence trail. Simply having a document is not enough. Its quality is everything. For a director's loan, an email exchange is weak evidence. You need a formal, signed agreement with commercial terms. For a capital injection, a simple deposit is not enough. You need board resolutions and an updated CR12 from the Registrar of Companies. Let's see this in practice. Mr. Owino transfers 5 million shillings to his company as an informal loan. With no paperwork, KRA deems it income and assesses over 3 million shillings in taxes and penalties. Now consider better manufacturing. They need 10 million shillings. They pass a board resolution, sign agreements, and update their CR12. When KRA queries the deposit, they provide the documents and the query is closed within a week. Proactive control is the only defense. This isn't a year-end task, it's a daily discipline. The most critical control is a monthly bank reconciliation. Every single deposit must be matched to its source document. This checklist ensures nothing falls through the cracks, turning your reconciliation from a task into a shield. If you have discovered poorly documented deposits in your accounts, do not panic, but do not wait. First, investigate your records for the past 5 years and reconstruct the evidence trail. Next, consider a voluntary tax disclosure if one is active to declare income in exchange for a waiver of penalties. If that is not an option, talk to your tax advisor about filing amended returns to get compliant. The time to get organized was yesterday. The next best time is now. To safeguard your business, take these 3 steps immediately. 1. Conduct a historical risk review of your deposits for the past 5 years. 2. Implement a document everything policy today using the monthly checklist. And finally, schedule a meeting with your tax advisor to discuss your findings and plan your defense.